Let's bring in our expert panel to really kind of translate what's going on. Nataligned Securities Global Fixed Income Chief Andy Brenner, along with Federal Reserve skeptic and gold bull Euro-Pacific Capital President Peter Schiff. Peter, listen, the Q&A was going fine, and then the VIX suddenly, that fear index, down all day, flipped to the upside. Investors had penciled in zero rates for a few years, okay, but nearly 4 years of 0 to 0.25%. Should they just live on the edge and put it all in pen now?
Well, they can actually tattoo it on their arms. But the problem is, eventually the Fed is going to have to let interest rates go up if it doesn't want the dollar to become worthless. And I thought one of the funniest comments, other than the fact that Powell denied that we even have any asset bubbles. I mean, I don't know where he's living, but he claimed that the reason too low inflation is bad and the Fed needs to fight that is he said if inflation is too low, it's going to lead to interest rates being too low. But he wants low interest rates. They're already at zero. The Fed's goal is low interest rates. So how can the Fed say that low inflation is a problem if the only problem that we get from low inflation is low interest rates when he thinks that's the solution to every problem?
Yeah. Andy, what jumps out at you here? And Peter is certainly, I know, intellectually correct that we would probably have to see higher rates because inflation, by the way, folks, inflation is well below 2%, which is the Fed's now median target rate. But when we start to see hyperinflation, Andy, correct me if I'm wrong, it goes quickly. And does that not risk putting the Federal Reserve behind the curve?
Absolutely, Liz. That could definitely happen, but that's not going to happen in the near term. The reason the markets are off today is because people were, believe it or not, even more dovish. The Fed was not as dovish as they expected. The Fed is not increasing QE. The Fed is not yield curve capping. They're not buying long rates. They think the economy's better. You even had one dissent because he thought the economy is better and the Fed is going too far. The Fed has capped pretty much their balance sheet at $7.1 trillion is the high that it got in June. And it's done nothing the last 12 weeks. But on the good side of things, Liz, the corporate bond market, the new issue market, is on fire. Already $1.5 trillion has been issued in new issue IG this year. And that is what is promoting and pushing the equities better. And today you set a record globally of $2.61 trillion, all currencies, all things. Even high yield has set a record.
Oh, my God.
Now, are there bubbles?
I am telling you,
no
I know. But this is what makes me a little bit nervous, Andy. And Peter talks about, bubbles, and the Fed doesn't seem to see it. But there've got to be dislocations. I was on a WebEx call today with BNP Paribas and all their top experts. And I have to tell you, their equity and derivative strategist, Chief Greg Boodle, said he had noted that investors, and we all know that big tech and the big five names and the FANGs, blah, 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 have all done well. But not only are investors pouring into that, and paying a very high premium for the equities themselves, but the options market is starting to look like a pocket of risk. They're paying premiums, and there's a lot of money going in there. What distortions do you see, Peter?
Liz, well, first of all, the Fed knows there's a bubble because anytime the air starts coming out of it, it's there to blow more into it. I mean, all of its policies are deliberately designed to maintain that bubble. And the irony, Liz, is that everything the Fed is doing to inflate asset bubbles is actually deflating real economic growth on Main Street. The Fed is the biggest enemy of legitimate economic growth because it's so fixated on maintaining these asset bubbles that it now denies exist.
Andy, last Fed meeting before the elections, he made no bones about it. Congress has got to move on fiscal stimulus. He can't just be there holding up the, be the three legs of a stool. It's just impossible. Do you think that we might see some gyrations if Congress cannot get it together and cannot come out with some type of stimulus plan?
Liz, we absolutely do not need a stimulus plan. We don't need more money being thrown. We need an infrastructure plan. And there's no way you're going to get one between now and the election. It's going to have to wait till after the election. The Fed is there. The Fed can do stuff. I don't really think it matters who wins from a market standpoint. The Fed will still be there. And at the Fed, I'm telling you, you've got to look at the corporate bond program, and that's the one that's really working. All these other Fed programs are not working right now, and Powell kind of kicked it around. As far as bubbles, I'm not saying there are no bubbles. Just look at the NASDAQ. Just look at where the 200-day moving average is in the NASDAQ. You're down another 2,000 points. Yeah. So, yeah, you're potentially in a bubble, by the way, but the Fed's going to be there.
We don't. The Fed doesn't have to be there. That's the problem. And we don't need more infrastructure spending either. We can't afford that. We're broke. We don't want the government creating money and spending it. We want the government to stop spending so that they can free up those resources back to the private sector where they're needed. Everything the government is doing, all these government spending programs are making the economy weaker, not stronger.
I guess Peter's not a believer of the modern monetary theory.
No, nothing modern about that, and it's not even theoretical because it doesn't work.
Well, it seems to be working right now, Peter.
For the 10-year yield.
It's not working.
It's ticking higher. All right, this is why we bring these two together, because the person.
Right, it's working for me, but not for the country.
Indeed, gold has hit some good numbers lately. All right, great to have you both, gentlemen. Thank you so much, Andy Brenner, Peter Schiff.